Dutch Bros is emerging as a fast-moving, fast-growing disruptor within the U.S. quick-service beverage industry. Their streamlined operational structure focuses exclusively on beverages, giving it a distinct edge in execution and service, resulting in speed, customer connection, and menu innovation. In normal speak, this corporate talk means the focus is on serving beverages only via drive-thru and walk-up locations, with virtually no sitting or dining areas. Another reason Dutch Bros is rapidly growing comes down to them operating and franchising drive-thru shops, allowing for faster and more widespread reach. While mobile order functionality is expected to further enhance convenience, when it comes to the actual creation of beverages, training and skills of its baristas is a key part of the customer experience, since they are responsible for delivering the consistent, high-quality handcrafted beverages experience the company strives for. The customer-first attitude is regular corporate jargon with a dose of reality, because the lack of a place to sit and consume the beverages, like at a regular restaurant or cafe, means delivering a great experience to customers hinges almost entirely on the interaction when ordering and serving, which needs to exceed expectations to build a loyal customer base, something that has been achieved, resulting in the opening of many more new shops. The Dutch Bros menu features a wide range of customizable hot, iced, and blended beverages, with coffee-based drinks making up around 50% of the menu mix. Premium La Marzocco machines are used to handcraft espresso shots. There are also proprietary coffee-based freeze-blended beverages and cold brew, along with a proprietary energy drink, the Dutch Bros Rebel, which is highly customizable and helps appeal to a diverse customer base. The remaining portion of the menu mix consists of teas, lemonades, smoothies, food, and sodas, offering caffeine-light and caffeine-free beverages that can be enjoyed across all day parts and by customers of all ages. Another defining part of the Dutch Bros experience is customization, which allows customers to make their drinks their own through the addition of flavors and other modifiers. This level of personalization helps create a competitive moat and drives broad demographic appeal. At the same time, the pantry and made-to-order process also enable it to tailor many drinks to specific dietary needs, including sugar-free, dairy-free, caffeine-free, and fat-free, helping to flexibly position Dutch Bros favorably as customer trends evolve, which is just crucial given the modern consumer going gluten-free 1 minute and matcha cha-cha the next. Then, to further help build a loyal customer base, baristas are encouraged to take the extra step to make each customer interaction remarkable, so the experience exceeds customer expectations. In other words, this is a way to use the customer experience as meaningful differentiation in the industry. Building on the idea of loyal customers is the loyalty program Dutch Rewards, an app-based digital platform that has seen significant adoption, with approximately 68% of all transactions in 2024 attributed to Dutch Rewards members, up from 65% in 2023. The program uses a spend-based model, where customers collect points that can be redeemed for rewards such as free drinks, which can be utilized personally or shared with others. Points and rewards generally expire after 6 months, encouraging customers to engage regularly with the program. Dutch Rewards also offers a convenient feature called Dutch Pass, which allows members to preload funds on their account and pay through the app, reducing payment collection time and increasing speed of service. Additionally, Dutch Pass enables users to purchase and share digital gift cards. The Dutch Rewards program is a key tool for Dutch Bros to communicate and interact directly with customers, drive traffic, and enhance the overall customer experience. Data from the loyalty program and other parts of the customer experience yield consumer insights, which inform investments in personalized marketing to offer targeted messaging, offers, and rewards that enhance the Dutch Bros experience at an attractive return on investment. In 2024, Dutch Bros launched mobile order functionality within its Dutch Rewards app, which has been enabled in almost 100% of system-wide shops. It allows customers to place orders in advance and choose to pick up their drinks at either the walk-up window or drive-thru, with many customers opting for the pickup feature. Dutch Bros believes that mobile order provides enhanced convenience to customers, allowing them to avoid waiting in line and plan their visit in advance. The company's existing point-of-sale and kitchen display system integrates seamlessly with the mobile order system, and its shops are well situated to handle mobile orders with multiple beverage production bars and escape lanes. By offering mobile order, Dutch Bros believes it has an opportunity to drive traffic in the morning day part and appeal to a broader range of customers who may be time-constrained and have not previously considered Dutch Bros as part of their morning routine. Growing demand for mobile orders will be met with extra convenience alongside the focus on personalized delivery and friendly interaction from baristas in order to maintain and strengthen service and connection as a competitive differentiator. Dutch Bros' shop model is designed to prioritize speed and convenience while maintaining a personal experience. Approximately 90% of the company's business is conducted through the drive-thru, with the remaining 10% taking place at walk-up windows. The vast majority of Dutch Bros shops do not have lobbies with customer seating areas, instead focusing on efficient production and delivery of beverages. The company's shops are designed to support a drive-thru-centric business, with a smaller overall footprint than other drive-thru formats, but with nearly all square footage dedicated to beverage production. Dutch Bros typically targets lots of at least 25,000 square feet to handle substantial car volume, and most shops feature single or double drive-thru windows with multiple feeder lanes and walk-up windows. When Dutch Bros shops are busy, a runner barista greets customers before they reach the drive-thru window, explains the menu, and helps personalize orders using tablets to take orders and send them to baristas inside the shop. Many shops also have escape lanes that enable customers to exit the line after receiving their drink, increasing throughput and reducing congestion. This design allows Dutch Bros to efficiently serve a high volume of customers while maintaining a personal touch. Dutch Bros has a strong franchise base made up of long-term partners, many of whom began their journey working in shops as baristas. The company utilizes a mixed model, encouraging franchisees to develop within their existing operating areas while developing new regions with company-operated shops. Since 2017, Dutch Bros has focused on a company-operated strategy, recruiting operators from within the system, and anticipates that the majority of new shops will be company-operated. The company is a high-growth operator with considerable white space and opportunities, and its growth strategies include growing its people, shop base, transactions, and margins. To grow its people, Dutch Bros focuses on recruiting, developing, and retaining people, providing robust internal training and career advancement programs. The company targets 100% internal promotion for regional operators and invests in its leadership team to support operations and drive strategy. To grow its shop base, Dutch Bros aims to open new shops with superior financial returns, targeting a mid-teens annual new shop growth rate. The company invests in its shop development teams and utilizes a refined real estate strategy to support new shop productivity. Dutch Bros also seeks to grow transactions through innovation, paid media, Dutch Rewards, mobile order, and testing an expanded food offering in 2025. The company aims to capture beverage occasions that might be lost by potential customers who desire breakfast with their morning beverage and choose options other than Dutch Bros currently. In terms of margin growth, Dutch Bros targets year 2 contribution margins of 30% plus for new shops, which support quick paybacks and fund new unit growth. The company seeks opportunities to reinforce its shop-level P&L through operational improvement and continues targeting and achieving adjusted SG&A leverage through strong revenue growth and investments. Dutch Bros takes great pride in the quality of its coffee, and to ensure consistency across all shops, the company is actively involved in the sourcing, roasting, packaging, and distribution of coffee beans. Dutch Bros partners with third-party importers and exporters to purchase and import high-quality green coffee beans from across Central and South America. The company has also partnered with Enveritas, an independent nonprofit organization, since 2021 to provide sustainability verifications for its coffee sourcing. Annually, Dutch Bros has its green coffee purchases and farmer support impact investments assessed against Enveritas's responsible sourcing standards, which includes evaluating and monitoring environmental, economic, and social conditions within the sourcing areas. As part of its commitment to sustainability and quality, Dutch Bros sponsors a Coffee Origins Impact Program focused on continuous improvement and targeted investments in environmental, economic, and social conditions within its supply chain. The company is also a proud member of World Coffee Research, an organization dedicated to ensuring the future of coffee by preserving origin diversity and accelerating innovation for coffee agriculture and climate-resistant varietal productivity. Dutch Bros currently roasts all its coffee in its facilities in Grants Pass, Oregon, and Melissa, Texas, roasting coffee bean varietals to specific profiles designed to highlight each bean's unique flavors and aromas. After roasting, the coffee beans are blended to create the signature Private Reserve espresso blend, which is then packaged and shipped to distributors across the country that supply all company-operated and franchised shops. The supply chain has been designed to be flexible in response to changes in the market, typically maintaining around 4 months of green coffee bean inventory stored at its 2 ports of entry in the United States or at its roasting facilities. In the event of a supply disruption, Dutch Bros has identified alternate coffee beans with substantially similar flavor profiles that can be sourced and incorporated to produce its blend. In mid-2024, Dutch Bros opened a new roasting facility in Melissa, Texas, which is expected to increase the resilience of its supply chain and reduce transportation costs as the company expands company-operated shops eastward within the United States. This strategic move is part of Dutch Bros' efforts to ensure the long-term sustainability and quality of its coffee offerings. Dutch Bros' sourcing and supply chain efforts extend beyond coffee purchases to include dairy, syrups, packaging, Rebel energy drink, and other items. The company strives to have multiple sources for its key commodities, including dairy, to provide stability and mitigate potential disruptions. As Dutch Bros grows eastward, it continues to adjust its supplier and distribution network to find partners more centrally located to its expanding shop base. The company's supply chain team is recalibrating its innovation to implementation pipeline to add more process capabilities while remaining nimble for increased product innovation at scale. Dutch Bros manufactures its proprietary Dutch Bros Rebel energy drink via a co-bottling and co-packaging relationship, and neither the energy drink nor its syrups contain high-fructose corn syrup, as the company uses pure cane sugar as a sweetener for its non-sugar-free offerings. The company is committed to reducing its environmental impact and has begun rolling out tap systems and distributing its Rebel energy drink via a bag-in-a-box system to reduce its dependence on aluminum cans. Collaborations with supply chain partners also cover material decisions regarding ingredients and process changes, as well as examining new and existing suppliers' food safety and quality records, with the reserved right to conduct spot checks, on-site audits, and verify insurance coverage. Dutch Bros also requires franchise partners to purchase supplies and equipment from approved vendors to further enhance safety and quality within its system. New hires are taken through the Broista Manifesto, which includes food safety training, and must pass a flow check test before working a shift on their own. Dutch Bros' supply chain risk model evaluates products for risk based on numerous factors, including price volatility, supply continuity, and sustainability, in addition to food safety and quality assurance practices. By prioritizing quality, health, and safety, Dutch Bros aims to maintain its high standards and ensure the well-being of its customers and employees. The beverage industry is highly competitive and fragmented, with Dutch Bros shops competing on various factors such as convenience, taste, price, quality, service, labor, and location. The company's primary competitors include national and regional coffee chains, local specialty coffee shops, regional drive-through beverage chains, and drive-through quick service restaurants with coffee and other beverage programs, which operate company-operated, franchised, and mixed business models. Additionally, Dutch Bros competes with convenience stores, making the competitive landscape even more complex. In terms of intellectual property, Dutch Bros owns many registered trademarks and service marks in the United States, including its trademarked windmill logo, Dutch Bros Coffee, Dutch Bros Rebel, and Dutch Bros Blue Rebel word marks, and its recognizable Dutch Bros sign logo. The company believes that the Dutch Bros name and its distinctive marks are of significant value and importance to its business. As a result, Dutch Bros pursues registration and monitors the use of its marks in the United States, challenging unauthorized use and licensing the use of its marks to franchise partners, third-party vendors, and others through various agreements. These agreements typically restrict third-party activities with respect to the use of the marks, impose brand standards requirements, and require licensees to inform Dutch Bros of any potential infringement of the marks. The company also registers some of its copyrighted material and relies on common law protection of its copyrighted works, although these materials are not material to its business. The company's business is also subject to seasonal fluctuations that impact its revenue and shop gross profit margins. Dutch Bros typically experiences higher nominal system sales in the summer. Looking ahead, Dutch Bros is focusing on innovation to boost traffic across its rapidly growing footprint. In the first quarter of 2025, the coffee chain introduced a series of creative limited-time offerings, LTOs, including Sweet Cereal Sips and the Spring Fever Dream Trio. These menu innovations featured nostalgic flavors and eye-catching elements like Poppin' Boba and Rubber Ducks, helping the company drive solid same-shop transaction growth of 1.3% and overall revenue growth of 29%. Beyond beverages, Dutch Bros has expanded a food pilot from 8 to 32 shops, testing hot protein items aimed at capturing additional morning visits. Although food currently accounts for less than 2% of sales, the company sees it as a strategic opportunity to lift frequency and beverage attachment without compromising throughput or employee satisfaction. Early results from the food pilot are promising, and further expansion and a broader rollout are expected in 2026. These moves are part of a broader strategy to develop multiple sales layers, supported by its Dutch Rewards loyalty program, which is now responsible for 72% of transactions. The order-ahead business has also grown, reaching 11% of the mix. As competition in the beverage sector intensifies, Dutch Bros' ability to turn product experimentation into sustained foot traffic could be pivotal. In comparison to its competitors, Dutch Bros faces strong competition from legacy brands like Starbucks and reinvented players like Krispy Kreme. Starbucks continues to lead in beverage innovation and digital engagement, frequently launching seasonal drinks and leveraging its mobile app and loyalty program to drive repeat visits. Starbucks' extensive food menu gives it a strong edge in the morning daypart, an area Dutch Bros is aggressively targeting with its new food pilot. Meanwhile, Krispy Kreme is broadening its brand beyond donuts, with an increasing emphasis on coffee and limited-time beverage offerings, resulting in Krispy Kreme testing new menu combinations and partnerships to encourage bundled purchases and drive frequency, particularly during breakfast and snack hours. Then considering there's also competition from the drink offerings of major fast food franchises like McDonald's, Dutch Bros has its work cut out for it. But that's never stopped this company from trying. Since being founded in 1992 by brothers Dane and Travis Boersma, the company started with a humble pushcart in Grants Pass, Oregon, and has since expanded to become one of the fastest-growing brands in the quick-service beverage industry in the United States. For more on Dutch Bros and other companies, follow Ascencore. Thanks for watching and have a nice day.